Hello guys, welcome back, and this is the second uh, class for the Forex beginner course, getting started with Forex trading. So I'm going to be talking about market size and liquidity, but before that I would like to talk about the currencies that are traded in in Forex. So um, how we actually use the currencies. So now I'm referencing uh, Baby Pips. This PDF I'm using is from babypips.com. So this is like their uh, notes. They teach Forex. So I was able to download a PDF of their compiled lessons. So like I said, this was the PDF I read in my beginner time. That was around 2018, 2019. The PDF is about 361 pages. I read this PDF in 2 weeks, everything to know about Forex. So I've gone through the whole PDF. All right, that's why I said I'm going to be picking out the major points. So you don't need to read all of them because there are most generic informations there that you might not be using to make money. So like I said, we're just going straight to the business. All right, so but I'll still leave a link in the description of the video so you could download the PDF for those that want to expand their knowledge more, that want to do more research, so you can go through it. So now the currencies I just talked about, they are traded in pairs, and these are the major currency pairs. So this one is very vital. You need to know the major currency pair. We have Euro USD. That Euro is pairing with dollar. You see, Euro USD. That means Euro is being paired with dollar, and then USD JPY. That means UX dollar and Japanese yen. So that's how we trade the forex. We trade them in pairs. So like that's why I say this currency exchange. So we're exchanging dollar for USD JPY, just like that. You're exchanging GBP USD for dollar. So that's what I mean by foreign exchange. So the FX gig, we call it euro dollar. This one dollar yen. For JP USD we call it pounds dollar. So you see, so these are the major currencies. We have about 7 major currencies in the forex market, and most of the time I work with these major currency pairs. I just have some few cross currency, but the major currency pairs are good for a start, especially Euro USD. That's one of my favorite pair, and AD USD. I trade most of those pairs. So that's how we use the forex pairs. If you go to your broker, this is how you're going to be seeing it when you go to your MT4 trading platform. So these are the major cross currency pairs too. So we have the major pairs, and then we have the major cross currency pairs, or you can call it the minor pairs. So that is the pairs that are not uh, involved with UX dollar. Now dollar is the most traded pair in the financial market. Dollar has about 95% transaction of the world. That's why we call it Federal Reserve. So dollar, it's the Federal Reserve currency of the world, and most of the transaction in the world is being done on UX dollar. So why these are called major currency pairs is because the they are attached with UX dollar. You can see UX dollar, UX dollar, UX dollar, UX dollar. That is why they call them major currency pair. But you see this one, they don't have UX dollar attached to it. So that's why they are called minor currency pairs. So, so you can see currency pairs that don't contain UX dollar are known as cross currency pairs. So that's what I'm trying to say, cut across to you. So this one is yen crosses EURJPY. This one too is one of my pair. I trade EURJPY a lot. So EURJPY, the nickname is Euro Yen or UP. So you could just play around with this, but just know them that these ones without dollar are minor currency pairs. These ones are pound crosses. So GBP CHF, GBP AD, GBP CAD, GBP NZD. So it's other country pairs crossing each other, but without dollar involved in them. So that's what I mean by the uh, minor currency pairs. So these ones are exotic pairs. Most of the time, these ones they have high spread. I'm going to be teaching you about spread later, but these ones I don't really use all those pairs. So is that everything you're going to be using? So now, all right. So let's talk about the market size and liquidity. That means the forex market size and liquidity. So the forex market size runs 24 hours every day. So once it starts on Sunday night, the market opens Sunday 10 p.m. my time. So and it closes Friday 10 p.m. My time. So the market runs for 24 hours. So you could take a trade, any trade from Monday to Friday, any time. The market is just open and running. So that's how the forex market operates. So you trade it Monday, Tuesday, Wednesday, Thursday, and Friday. Then it opens, it closes on Friday night, and then Sunday night, it's live again, and that's it. So I said, I think I made a mistake on the statistics. So the dollar is the most traded currency, taking about 84.9% of all transactions. So dollar is the most traded currency in the world. This is the distribution of the FX market. So dollar takes 84.9, euro and like that. So the dollar is the king in this market. The dollar is the king. So that's all you need to know there. And because United States economy is one of the largest economy in the world. Yeah, that's why dollar is the king. So, all right. So there are different ways to trade forex. We have the spot market, futures, and options. But all these ones are just the major thing we have. Should I say we have swing trading, scalp, and long-term trading. So you could just the way we trade forex is that you could take a trade that will run for a day, or run for 2 or 3 days, or run for a month. So that's all you need to know. Like I said, you're hitting it straight to the point. All these ones are uh, generic information. So advantages of forex now. What are the advantages of forex? The advantage of forex is that no commission, no middleman. All you need is just your internet and your broker, or should I say the broker is the middleman that is giving you access to the market. But that's all you need to know. No fixed lot size, low transaction, is a 24 hours market. You could go into the market and make money anytime, so far as the market is open and running. So no one can corner the markets. Everything is just working the way it should. It's all price action, but it's actually uh, the market is affected by economic events. So you have to be paying attention to uh, economic events. So let's talk about leverage. So what is leverage? This one is important. So in forex, trading a small deposit can control uh, much larger total contract value. Now, what will help us here is leverage. So leverage gives the trader ability to make nice profits, at the same time keep risk capital to a minimum. So uh, leverage, what it means is that it's kind of like borrowing money from your broker to trade. So we have leverage starts with 1 is to 50, 1 is to 100, 1 is to 200, and like 1 is to 500. So most of the time we use 1 is to 500 by default. So um, if I start going more theoretical, it might confuse some beginners. Like I said, it doesn't really this one doesn't really matter. Just use 1 is to 500, and once you're opening your account, they ask you for leverage. You can use 1 is to 500. It's going to help you make more profits. At the same time too, it's going to help you make more losses, but you know your losses. You know what you're going to risk what you can afford to lose per trade. So that is how we use leverage. If I start telling you 1 is to 50, the difference between 1 is to 100, 1 is to all those are just waste of time. Leverage, it's bring money from your trader to increase your ability in the financial market. So the difference between forex and stock, that's generic, and you could read through them. I'm going to leave the PDF, but like I said, I'm just giving you what you need to know to trade the forex market. So yeah, okay, this one is important. You know the forex market structure is controlled by the central banks, because you can see we are trading currencies, and who controls the currency of any country is the central bank, right? So the central bank controls the prices of this currency. So you have to be paying attention to what they are doing. So we are just buying and selling and following the market direction. So all right, ahead. This one too is important. So you need to know the forex market hierarchy, people that are involved in this market, the major banks, and the electronic brokering services, the medium-sized small banks, the retail markets makers, retail ECN, hedge funds, and these are us, the retail traders. This is where we are. So these are the big players in the market, the major banks and the central banks. So that is how the market moves, and that is how uh, the the order flow or things go on in the market. That's all you need to know. You could read more of that, but like I said, we're learning how to make money here. So the market players, we have the super banks, large commercial companies, government and central banks, the speculators, and that's it. We don't need all those history. So all right, so let's talk about the retail forex broker. It's very important you know this one. So in the past, only big speculators and high capitalized investment funds could trade the currencies. So, but thanks to retail forex brokers and the internet, this isn't the case anymore. Now we could actually access the markets through our retail forex brokers. So we could hardly get any barrier. All right, so we could trade forex from the comfort of our home, and we could use these two forms: the market makers or the electronic communication network, the ECN. So this one, they set their own prices. uh, they make their own bid and ask prices, and the ECN brokers, they use the best bid and ask prices available in different institutions to uh, make their own. They offer that to us. So the market makers and the electronic communication network. So basically, we use this one most of the time. We use these electronic communication network brokers. So you could read more about this one. I would advise you read more about the ECN broker and all those stuff. So okay, let me just explain. Electronic communication network is the name given for trading platforms that's that automatically match customers buy and sell orders and stated prices. So these stated prices are gathered from different market makers, banks, or even other traders who use the ECN. So as you're buying, you're buying from somebody that wants to sell. As you're selling to somebody that wants to buy. That's what it means. So whenever a certain sell or buy order is made, it is matched up with the best bid and ask price out there. So that's what it means. So let's say you took a buy here now. As you're buying, somebody is selling to you. If the market goes up, you want to take profit. As you're selling out your trade, someone is buying it there for you. So that's how it works. So due to the ability of traders to set their own prices, ECN brokers typically charge a very small commission for the trades you take, and that commission is called spread. So it's called spread. The combination of tight spreads and small commissions usually make transaction costs cheaper on ECN brokers. So like the broker I use is an ECN broker, the Light Finance. uh, they charge me spread. Spread is basically the difference between bid and ask price. So between the buy and sell price, the difference between them, it's spread. So you want to trade with a broker that has low spread. All right, I've traded with a lot of forex broker, but you see this Light Finance, their spread is superb. So that's why I'm trading with them. I'm not just recommending them for you because of affiliation, but they have low spread. I've tested it, and they are working very fine. So, and they charge small commissions, and you can do well using them. So there are other brokers. the same thing, the chart spread. Some of them their spread are big, some of them their spread are small, but you want to follow a broker that has low spread and less commission to access the market, and that's it. So that's what I'm talking about the ECN broker. That's what I use. But you could read more of this and just know the difference. All right. So that's that for the markets, size, liquidity, and all those stuff. So on the next one, I'm going to be talking about trading sections, uh, when to trade the forex market. All right. Hope you find this one insightful. I'll see you on the next video.